Welcome traders to another Tickmill earnings report preview with me, Patrick Munnelly. Before we jump into today's report, as always, we want to adhere to the risk disclaimer. Notably, the material provided is for information purposes only and should not be considered as investment advice. The views, information and opinions expressed by me in this recording are solely mine and they're not indicative or representative of those held by Tickmill UK or Tickmill Europe Limited. Equally important, CFDs are a complex instrument and come with a high risk of losing money rapidly due to leverage. 71% and 65% of retail investors' accounts lose money when trading CFDs with Tickmill UK or Tickmill Europe Limited. Okay, let's jump into today's report. We are looking at American Express, who report before the open of New York trading on Friday. We are looking for an earnings per share print of $2.43 on revenue of $11.59 billion. I would point out there is a whisper number on the street that could see this earnings per share print as high as $2.60. Year to date, American Express shares have displayed stellar strength, increasing nearly 17% in value and easily outpacing the S&P 500. Needless to say, American Express has been a bright spot in what has been a tricky market environment. A vital metric for American Express is discount revenue. Discount revenue represents the money earned from fees charged to merchants with whom the company has entered into card acceptance agreements for processing card member transactions. Looking at the data, growth in the metric has been solid over the last 4 quarters. In its Q4 report, American Express rates in nearly $7.5 billion discount revenue, a quarter-over-quarter increase of a strong 12%. Additionally, discount revenue grew by an impressive 35% year-over-year from 2020 to 2021. For 2022, the high estimate for annual discount revenue currently sits at $31 billion. Another critical source of revenue for American Express is interest income. This metric has displayed solid growth over the last 4 quarters, similar to the discount revenue. In Q4 2021, total interest income for the company tallied at $2.4 billion, a 4.3% quarter-over-quarter increase. However, when looking at year-over-year percentages, interest income for American Express actually shrunk by 10% from 2020 to 2021. Heading into Q1, an improved economy and higher consumer spending levels will likely push this metric higher. So let's take a look at some of the statistical patterns around the American Express release. I would note we're not going to see the same volatility that we've seen in recent days with Netflix and Tesla especially. For American Express, stock has moved higher in the immediate aftermath of earnings, 6 out of 12 previous reports. On average, the stock is up 0.4% in the day of trading after the company reports earnings. Based on the previous 12 earnings releases, the stock has then actually traded lower 1 day after earnings for an average loss of 0.2%. However, the average 5-day performance is a plus 1.7%, and that's printed on 67% of the time. In terms of the implied move around the release from the options market, we're looking at about a 5.5% move on earnings, and the stock has averaged about 4.2% moves in recent quarters. In terms of option flows, there has been a notable buyer, 1,054 contracts of the 190 call expiring tomorrow. Options order flow sentiment has been relatively bearish. Investor sentiment going into company's earnings release has been about 70% expecting an earnings beat, and the short interest is absolutely minimal, 1.49% since the last report. So that taken into consideration, let's jump into the technicals here and see where the opportunity is on the trading side. So if we're thinking about roughly a 5% move on the day, we can think about an $8 move in terms of the shares tomorrow potentially. I'd say between $8 and $6 would be reasonable. So I'm looking for any pullbacks back into this 185, 187 area to find support. And what I'm ideally looking for is a close through 194 to engage on the long side, initially looking for that test of the $200 level. And then as pullbacks remain supported, I'm targeting a move up into the projected ascending trendline resistance coming in at 210. That's also the equality objective versus the 174 swing low there. and also the 127 extension of this last leg to the downside, 211, and just above there we have monthly projected range resistance at 212. So looking for a close through 194 to engage on the long side, looking for 210, 212 as the next upside objective. At this stage, couldn't really get bearish on the stock unless we took out this ascending trendline support coming in around 180, which would suggest that we have a more meaningful top in place, but the setup looks relatively constructive at this stage. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.